The skeptics have been wrong about silver for months now, and they're about to learn an expensive lesson. While everyone's been focused on gold hitting new highs, silver has been quietly building the most explosive setup we've seen in over a decade. And the people who dismissed it, who called it a dead trade, who said the rally was over, they're about to watch in disbelief as this metal does something that will rewrite the precious metals playbook. Let me show you exactly what's happening right now because the evidence is overwhelming. Silver just did something it hasn't done in years. The technical breakout we're seeing isn't just significant, it's historic. We're watching a pattern that has only appeared a handful of times in the last 50 years, and every single time it's led to moves that made early investors fortunes, while leaving skeptics scrambling to chase the rally at much higher levels. Here's what most people don't understand about silver. This isn't just another commodity. This is the most undervalued strategic metal on the planet, and the supply-demand fundamentals have reached a breaking point. The Silver Institute just released their forecast, and it confirms what insiders have known for months. The global silver market is heading into another massive deficit. We're talking about demand outstripping supply by hundreds of millions of ounces, and this isn't a one-year phenomenon. This is structural. This is permanent. And the implications are staggering. Think about what a deficit means in real terms. Every single year, more silver is being consumed than is being pulled out of the ground. Industrial applications are devouring this metal faster than miners can produce it. Solar panels alone are consuming record amounts, and that demand is accelerating as countries race to meet climate goals. Electric vehicles need silver. 5G infrastructure needs silver. The green energy transition that governments worldwide are pushing, it's built on silver. And here's the kicker. Unlike gold, most of the silver that gets used industrially is gone forever. It's not sitting in a vault waiting to come back to market. It's dispersed in tiny amounts across millions of products, economically impossible to recover. But let me tell you what really has my attention. It's not just the industrial demand story, as compelling as that is. It's what's happening in the investment world. Retail investors are waking up. After years of being told that precious metals are relics, that crypto is the future, that stocks only go up, people are starting to remember why silver has been money for 5,000 years. The flows into silver ETFs have been accelerating. Physical silver dealers are reporting inventory shortages. Premiums on coins and bars have been climbing. This is the early stage of something much bigger. Now, before we go further, I want to mention something quickly. I put together a free guide that shows the saving secrets thousands of American retirees are using to protect their hard-earned wealth. It's in the description below. If you're concerned about where the economy is headed, it's worth a look. Completely free, no strings attached. Let's talk about what the charts are telling us, because this is where it gets really interesting. Silver recently broke through a resistance level that had held for months. This wasn't a weak, tentative break. This was a powerful surge with massive volume behind it. When you see that kind of technical action, it's telling you that big money is positioning. The kind of money that doesn't chase rallies, the kind that creates them. Look at the gold to silver ratio. For those unfamiliar, this ratio tells you how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio has averaged somewhere in the range of 50 to 60. But we've seen this ratio spike to extreme levels in recent years, meaning silver was incredibly cheap relative to gold. Now watch what happens when this ratio starts to compress. When silver starts catching up to gold, the moves are violent. We're talking about silver outperforming gold by multiples. And we're seeing the early signs of that compression starting right now. Here's a story that illustrates what we're dealing with. Back in the late 70s, silver was trading in the single digits. Most people ignored it. Gold was getting all the attention. But a few smart investors recognized that silver was absurdly undervalued relative to gold, relative to its industrial uses, relative to the monetary chaos that was unfolding. They accumulated quietly, and then the ratio started to shift. Silver went from under $10 to $50 in less than 2 years. The people who positioned early didn't just make money. They made generational wealth. The skeptics who waited, who needed more proof, who wanted confirmation, they either missed it entirely or bought at the top. I'm not saying we're going to see that exact scenario play out again. Every market cycle is different. But the underlying dynamics, the supply deficit, the monetary uncertainty, the technical breakout, these are eerily similar. And the skeptics today sound exactly like the skeptics back then. They're using the same arguments. They're making the same mistakes. Let me tell you what the big institutions are doing, because their actions speak louder than any analyst report. Central banks have been accumulating gold at record pace. Everyone knows that. But what's flying under the radar is how many of these same institutions are starting to look at silver differently. They're recognizing that in a world where industrial demand is soaring and supply is constrained, silver isn't just a monetary metal anymore. It's a strategic resource. Countries that control silver supplies have leverage in the green energy transition. They have leverage in technology manufacturing. This isn't just about investment returns. This is about economic security. The COMEX, the major exchange where silver futures trade, has been showing some fascinating patterns. The amount of physical silver in COMEX warehouses has been fluctuating in ways that suggest tightness in the physical market. When you see registered inventory, the silver that's actually available for delivery, dropping while open interest stays high, that's a setup for a squeeze. It means there are more paper claims on silver than there is physical metal to back those claims. And if enough people start demanding physical delivery, the whole structure gets tested. Now let's talk about what happened in the last major silver rally, because the lessons are instructive. Silver had been consolidating for years, building energy. The skeptics said it was dead money. Then seemingly out of nowhere, it exploded higher. But it wasn't out of nowhere. The signs were there for anyone paying attention. The deficit was growing. Industrial demand was accelerating. Investment demand was starting to pick up. And then the technical breakout happened, and suddenly everyone wanted in. The problem was, by the time the mainstream media was talking about it, by the time your neighbor was asking how to buy silver, the easy money had already been made. That's the pattern we're seeing set up again right now. The deficit is here, the industrial demand is accelerating, the investment flows are starting, the technical breakout is happening, but we're still early enough that most people aren't paying attention. The skeptics are still in control of the narrative. They're still saying it's too risky, too volatile, that you should stick with traditional assets. And that's exactly what they said before the last major move. Here's what most investors don't understand about silver's volatility. Yes, silver moves more dramatically than gold. Yes, it can be nerve-wracking to watch, but that volatility cuts both ways. When silver moves, it doesn't inch higher. It surges. The gains can be breathtaking. And if you're positioned before the move starts, if you're in while the skeptics are still debating whether it's real, that volatility becomes your greatest advantage. Think about the industrial demand picture for a moment. Solar panel installations are projected to continue growing exponentially. Every single panel requires silver. There's no substitute that works as well. Electric vehicles are becoming mainstream. Every EV uses significantly more silver than a traditional car. 5G networks are being built out globally. The infrastructure requires silver. These aren't speculative future demands. These are happening right now. And the mining industry cannot keep up. Silver mining is incredibly challenging. Most silver doesn't come from primary silver mines. It comes as a byproduct of mining other metals like copper, lead, and zinc. That means silver supply is largely dependent on the economics of those other metals. You can't just decide to produce more silver because the price is rising. The supply response is slow, constrained, and often inadequate. Meanwhile, demand is accelerating on multiple fronts simultaneously. Let me paint you a picture of what's coming. Imagine you're a manufacturer who needs silver for your products. You've been able to source it reliably for years, but now you're hearing about delays. Your suppliers are telling you that premiums are rising. You're competing with solar companies, with EV manufacturers, with electronics producers, all scrambling for the same limited supply. What do? You start securing supply further in advance. You start paying higher prices to guarantee delivery. You start hoarding inventory. And that behavior, multiplied across thousands of companies worldwide, creates a feedback loop that drives prices even higher. Now layer on top of that the investment demand. When retail investors start piling in, when institutions start allocating, when central banks start viewing silver as strategic, you're adding massive new demand on top of an already tight market. The physical market can't absorb that kind of buying without prices adjusting dramatically. And we're seeing the early stages of that adjustment right now. The skeptics will tell you that silver has failed to break out before. They'll point to false starts and failed rallies. And they're not wrong. Silver has disappointed many times, but here's what they're missing. Each of those failed rallies happened in a different fundamental environment. The deficits weren't as severe, the industrial demand wasn't as strong, the monetary backdrop wasn't as supportive. This time is genuinely different, not because silver has changed, but because the world has changed. We're living through the greatest monetary experiment in human history. Central banks have printed more money in the last few years than in all of previous history combined. The debt levels are astronomical. The political will to address fiscal imbalances is non-existent. And people are starting to wake up to what that means for their savings. When you hold dollars, euros, yen, you're holding a claim on governments that are spending far beyond their means. When you hold silver, you're holding a tangible asset with real industrial utility that can't be printed into existence. Here's a question worth considering. What happens when the general public figures this out? Not the sophisticated investors who are already positioned, not the institutions that have been accumulating quietly, but the average person who's been told their whole life that stocks and bonds are the only real investments. What happens when they start looking for alternatives? What happens when they realize that precious metals aren't just for doomsday preppers and conspiracy theorists, but are actually rational hedges against monetary instability? The answer is, they flood into the market all at once, and silver, with its smaller market size compared to gold, with its tight physical supply, with its industrial demand floor, becomes the obvious choice for people who want exposure but find gold too expensive per ounce. That wave of buying, when it comes, will overwhelm the available supply, and the skeptics who waited for confirmation will be buying at multiples of current levels. Let me tell you about the LBMA, the London Bullion Market Association, because what's happening there is revealing. The LBMA is one of the major centers for precious metals trading. The amount of silver that trades on paper through the LBMA dwarfs the amount of physical silver that actually exists in their vaults. This is the nature of modern commodity markets. Most trading is purely financial, with no intention of physical delivery. But that system only works as long as everyone trusts that physical metal is available if they want it. The moment that trust breaks, the moment people start demanding physical delivery in size, the whole structure is exposed. We've seen glimpses of this stress before. During periods of high demand, premiums on physical silver have spiked well above the paper price. Dealers have struggled to source inventory. Delivery times have extended. These are warning signs that the physical market is much tighter than the paper market suggests. And if we see a real rush into physical silver, if investment demand surges the way industrial demand already has, those stresses will intensify dramatically. Now, if you're sitting on retirement savings, if you have $100,000 or more in traditional retirement accounts, this is something you need to understand. The concentration of wealth in paper assets, in stocks and bonds that are priced based on the assumption that central banks will always support markets. That's a massive risk that most people aren't even aware they're taking. I put together a guide on how gold IRAs work, how you can get physical precious metals into your retirement account without tax penalties. It's in the description. This isn't about abandoning traditional investments entirely. It's about diversification. It's about having a portion of your wealth in assets that aren't dependent on the financial system functioning perfectly. Because when you look at the debt levels, the political dysfunction, the geopolitical tensions, betting everything on business as usual seems increasingly naive. Let's talk about what's happening geopolitically, because this is a huge part of the silver story that gets overlooked. The world is fragmenting. The post-World War II order that created relative stability and cooperation is breaking down. We're seeing the rise of competing power blocks. We're seeing countries increasingly willing to challenge the dollar's dominance. The BRICS nations are actively working on alternative payment systems. They're settling trade in their own currencies. They're accumulating gold and looking at other hard assets as alternatives to dollar reserves. What does this have to do with silver? Everything. In a world where trust in fiat currencies is eroding, where countries are looking for ways to conduct trade without relying on the dollar, precious metals become increasingly important. Silver, with its industrial applications and its monetary history, sits at a unique intersection. It's valuable for manufacturing, which means countries need it regardless of monetary considerations. But it's also a store of value, a hedge against currency debasement, a way to preserve wealth outside the traditional financial system. Think about a country that's worried about sanctions, about having its dollar reserves frozen, about being cut off from the Western financial system. What do? They accumulate hard assets. They build up stockpiles of strategic materials. Silver fits that profile perfectly. It's portable, it's valuable, it's needed for industrial production, and it's been recognized as money for millennia. The strategic accumulation of silver by nations is something that's happening quietly, but the implications are enormous. Here's a historical parallel worth examining. In the early 1970s, the Bretton Woods system collapsed. The dollar's peg to gold was severed. Inflation started to accelerate. People lost faith in paper currencies, and precious metals went on one of the most spectacular runs in history. Silver, in particular, saw gains that seemed impossible. It wasn't just about investment demand. It was about a fundamental loss of confidence in the monetary system. People wanted tangible assets. They wanted something real. We're seeing echoes of that today. The monetary system is under stress. Inflation has proven far more persistent than central banks predicted. The tools that worked in the past, raising interest rates to cool the economy, are becoming politically untenable because of the debt burden. Governments are trapped. They can't afford high interest rates because of the cost of servicing their debt. But they can't let inflation run wild without destroying the currency. It's a no-win situation, and the people who understand this are positioning in hard assets. The skeptics will say that central banks have everything under control. They'll point to the fact that the system hasn't collapsed yet as proof that it won't. But that's not how these things work. Systems can appear stable right up until the moment they're not. The cracks appear slowly, then all at once. And by the time it's obvious to everyone that there's a problem, it's too late to position defensively. The assets that provide protection are already priced for the crisis. Silver is still in that window where it's not obvious to most people. The mainstream financial media isn't talking about it constantly. Your friends and family probably aren't asking you about it. The price, while it's been moving higher, hasn't gone parabolic yet. This is the opportunity. This is when you can still get positioned before the crowd arrives. Because make no mistake, the crowd is coming. The fundamentals are too compelling. The technical setup is too strong. The monetary backdrop is too supportive. Let me tell you what happens in the next phase of this move. As silver continues to grind higher, as it breaks through key resistance levels, the momentum traders start to notice. These are the people who don't care about fundamentals. They just follow price action. When they see a strong uptrend, they pile in. That buying creates more upward momentum, which attracts more momentum traders, which creates a self-reinforcing cycle. And silver, because of its smaller market size and its volatility, is particularly susceptible to these momentum-driven surges. But it's not just momentum traders. As the price rises, as silver starts making headlines, the retail investors who missed the early move start to feel FOMO, fear of missing out. They've watched the price climb, and they can't stand being on the sidelines anymore. So they buy, often at exactly the wrong time, near short-term tops. But even their poorly timed buying adds fuel to the fire. It pushes prices higher, which attracts more attention, which brings in more buyers. The institutions, the smart money, they're already positioned. They bought when the skeptics were in control, when the narrative was negative, when prices were depressed. Now they're sitting on substantial gains, and they're happy to let the momentum traders and retail investors push prices even higher. Eventually, they'll take profits. Eventually, there will be a correction. But we're nowhere near that point yet. We're still in the early stages of this move. Here's what the skeptics don't understand about market psychology. Markets don't move in straight lines. There will be pullbacks. There will be moments of doubt. There will be news that seems negative. But the underlying trend, driven by the fundamental supply-demand imbalance, by the monetary instability, by the industrial demand growth, that trend is intact. The pullbacks are opportunities for those who understand the bigger picture. They're chances to add to positions at better prices. The skeptics see the pullbacks as proof that the rally is over. The informed investors see them as gifts. Think about the mining companies for a moment. Silver miners have been struggling for years. The price of silver hasn't been high enough to justify major new mine development. Existing mines have been depleting. The easy-to-access deposits have been mined out. What's left is deeper, lower grade, more expensive to extract. This means that even as the price rises, the supply response will be muted. It takes years to bring a new mine online. It requires massive capital investment. And with the uncertainty around future prices, With the memory of previous boom-bust cycles, mining companies are cautious about overcommitting. This supply inelasticity is crucial. In most markets, when prices rise, supply increases to meet demand and prices stabilize. But in silver, the supply can't respond quickly. The industrial demand is growing regardless of price because silver is a tiny component of the final product cost. A solar panel manufacturer isn't going to stop making panels because silver costs a bit more. The silver is a fraction of the total cost, so demand stays strong even as prices rise while supply struggles to keep up. That's the recipe for a sustained bull market. Let me paint you a scenario. Imagine we're a year from now. Silver has doubled from current levels. The financial media is running stories about the silver boom. Analysts who were skeptical are now bullish. Retail investors are opening accounts to buy silver ETFs. Your neighbor's asking you how to invest in silver mining stocks. At that point, the easy money has been made. The risk reward has shifted. The people who bought early are taking profits. The people buying at that point are the ones who will experience the volatility on the downside when the inevitable correction comes. But right now, today, we're not there yet. We're in the phase where the fundamentals are screaming buy, where the technicals are confirming the breakout, where the smart money is still accumulating, but where the general public is largely unaware. This is the phase where fortunes are made. Not by being reckless, not by betting everything on one trade, but by having a well-reasoned position based on sound analysis of the supply-demand dynamics and the monetary environment. The geopolitical situation is only getting more complex. Trade tensions are escalating, military conflicts are multiplying, the cooperation that characterized the post-Cold War era is evaporating. In this environment, countries are thinking about resilience, about self-sufficiency, about having the resources they need regardless of what happens in global markets. Silver, as both an industrial metal and a monetary asset, fits perfectly into that strategic thinking. Consider what happens if there's a major disruption to silver supply. A significant mine has an accident. A major producing country faces political instability. A shipping route gets blocked. The market is already tight. Any supply shock would send prices soaring. And unlike some commodities where there are ready substitutes, silver's unique properties make it irreplaceable in many applications. You can't just switch to something else without significant cost and performance trade-offs. The skeptics will tell you that technology will find alternatives. They'll say that if silver gets too expensive, manufacturers will innovate around it. And there's some truth to that over the long term. But innovation takes time. Redesigning products, testing new materials, retooling manufacturing processes, this doesn't happen overnight. In the meantime, demand continues, supply is constrained, and prices adjust to clear the market. Here's what I want you to understand. This isn't about predicting the exact top or bottom. This isn't about perfect timing. This is about recognizing a major structural shift in a market and positioning accordingly. The silver market is undergoing a transformation. The deficit is real. The industrial demand growth is real. The monetary instability is real. The technical breakout is real. These aren't speculations. These are observable facts. The question isn't whether silver is going higher. The question is whether you're going to position yourself to benefit from that move, or whether you're going to be one of the skeptics who watches from the sidelines and then chases the rally at much higher prices. The opportunity is here, right now. While the narrative is still uncertain, while most people are still doubtful, while the price hasn't yet reflected the full extent of the supply-demand imbalance. Think about your portfolio. Think about your exposure to different scenarios. If the economy continues to muddle through, if inflation stays elevated but manageable, if the monetary system holds together, silver will still do well because of industrial demand. But if things get worse, if inflation accelerates, if there's a currency crisis, if geopolitical tensions boil over, silver becomes one of the best performing assets you can own. It's an asymmetric bet. The downside is limited by industrial demand and production costs. The upside is enormous if any of the tail risks materialize. The skeptics have been wrong about silver for months now. They've missed the early stages of this move. They've dismissed the deficit. They've ignored the technical breakout. They've underestimated the industrial demand growth. And they're about to learn a very expensive lesson about the cost of being wrong in a market that's undergoing a fundamental transformation. The evidence is overwhelming. The setup is clear. The opportunity is here. For those of you who've watched this far, who've taken the time to understand what's really happening in the silver market, I want to offer you something special. That free guide I mentioned earlier, the one in the description, if you're an American retiree with at least $100,000 in any retirement account, and you mention you watch this video, you'll get access to an exclusive one-on-one educational web conference. No obligation, no pressure, just a chance to learn from experts about how to protect your wealth in these uncertain times. This offer is only available to those who've made it to the end of this video, so take advantage of it. The silver market is about to punish the skeptics. The move is underway. The fundamentals are aligned. The technicals are confirming. The smart money is positioned. The only question is whether you're going to be on the right side of this trade, or whether you're going to be one of the people who looks back and wishes they'd paid attention when the opportunity was staring them in the face. The choice is yours.